The Corn School on realagriculture.com is brought to you by BASF and Pride Seeds. Mo 2013 corn crop is finally in the ground. As you mentioned off camera, we're off to a cool start, but the crop's in the ground and we look okay. From a marketing perspective, how should farmers be looking at this corn market right now?
Well, the corn market is behind. It was a wet, cool spring, as you said, and it was delayed. Some of those crop projects show that we completed planting in the United States, in Ontario, and even here. But that corn is at least 2 to 3 weeks behind. So that pushes pollination, particularly in the United States, the largest crop, right into the second, third week of July. And so the market mentality thus far has been that rain makes grain. They're reminded of 2009. In 2009, the yield was 164. It was a really high yield. It was a wet, cool spring followed by a wet, cool summer. And so they're reminded of that, but now we're starting to get reminded of 2011 when the yield dropped to 147. The average December corn futures price was about 622 a bushel. And so we've had these rallies along the way in the last couple of months because of this delay in rain. And lately, even yesterday, it almost seemed like there was some panic buying where December corn jumped up to 570 and a half, the highest rate since March 25th, because all of a sudden we got weather problems again. So it's not so much wet, cool weather. As you said, the corn is in the ground. But now the American GFS weather model is suggesting that there's this heat dome or ridge on the western plain that's going to travel north up to Western Canada and east to the Midwest. Now, if anybody remembers last year, it was around this time of the year when that heat really started to play a role. But I got to warn you that the U.S. Drought Monitor map, if you look at it, the east has broken the drought, the west is still dry. The question is, will the drought travel from the west to the east? And over the next couple months, it can. So that American GFS weather model suggested that over the 6 to 15 day forecast, which puts you right into that pollination, critical pollination stage, is going to create some problems. And that created some nerves of the traders, and all of a sudden we had this buying, pulled the wheat and the beans and canola higher. And then this morning, and I always tell my clients, you got to watch the outside factors too. Yesterday afternoon, after the markets closed, Ben Bernanke in his speech, and he said this a month ago, we're going to start shutting down this QE3 spending, this 85 billion bond purchase program per month, and the market goes nuts. So the Dow hit this 15.5 high a month ago, broke below 15, rallied back, and then yesterday he mentioned that at some point this year it's going to come to an end, and they weren't happy. Their concern is that the U.S. economy is not strong enough without Ben Bernanke to just roll on its own. I disagree. I think it is. We've grown the jobs by 140,000 per month for the last 4 months. The last month was 185. Some former Federal Reserve guys are saying that that number has to be 200,000 per month average. I guess the standard has changed. I don't know. It used to be 150. So, by the way, it doesn't matter. This is, I think, an overreaction. But this morning, the Chinese PMI index, Purchasing Manager Index, came in and it was bearish. 48.3 for the month of June, a 9-month low. Every time that number is below 50, it means contraction of the economy, and the market goes nuts. So you got all these speculators selling, taking that risk off, and then once they digest that over a couple of days, they come right back to the marketplace. So we're not concerned at all, but this weather model between 6 to 15 days could change, and the European model is disagreeing entirely. They think that heat dome is going to stay at the western plain, not travel east. So the bulls are saying, watch out. The bears are saying, we got lots of moisture, we're not concerned.
So all that considered, there's a lot of information there. How does this feel to you? Does it feel like, is this kind of like a just incremental selling kind of year, or is this?
No, we've been a big bear since last September. We've talked about this short crop long tail for the longest time. We really turned bullish about 2 to 3 weeks ago. We felt that the yield was going to be lower because of the late planting season, smaller crop. No longer are we going to get a monster crop, but it could still be a big crop. And we've lost acres. We don't know how many. We've got a June 28th acreage report coming up next Friday. That one's going to create a lot of fireworks. Now, yesterday, Informa came out and said, we lost 2 million acres. Now, that's important. You know why? Because Informa is a very conservative house when it comes to lowering these numbers. They're just like the USDA. they typically don't lower corn acres by 2 million in one report. USDA is not famous for lowering corn acres by 2 to 3 million over a long period of time. It's very rare. So that's giving more weight, more confidence to the marketplace that we've actually lost 2 to 3 million. The market thinks 3 to 5. If the USDA, and this is very unlikely, but if the USDA does lower acres by 3+ million next week, and the expectation is only for 3, and let's say they reduce total acres of corn from 97.3 to 93 or lower, guess what? Corn's going to 6. Probably that's 6, 6.25. So my range is 450 to this 6 range. Over the next 2 weeks, probably through mid-May, you can postpone your marketing plan right to that July 11th WASDE report, because on July 11th, they're going to have to lower the ending stocks again. You subtract 3 million, 3.5, and don't forget, the market may be factoring some of this in already. You're probably down to about a 1.4 to 1.6 billion bushel ending stocks number. No longer the monster crop of 2.177 in February or the 1.949 billion bushels in June.